We're going to be taking a look first at trend lines, what they represent, a little bit of conceptual basis for them, how they are identified, how they are drawn, and then we're going to go look in the markets, look at practical examples, and apply that information. So, like always, let's hop out of the charts. All right, so our goal here is to figure out what exactly a trend line is. Now here we've got a table in front of us, and on the left we have traditional support and resistance, and on the right we have trend line. So our goal by the end of this is to answer the question, what's the trend line? And we're going to start over here on the left-hand side by drawing a traditional horizontal support and resistance level. So this level right here is a horizontal support and resistance level. Now, how does price react at a support and resistance level? Well, let's say that we are under the level, price is under the level, then that level will hold as resistance. So here the level is holding as resistance, pushing price down, and then when price does breach through the level, that level will then turn to support, price will come back to retest, it will hold a support, and price will continue on. So that is typically how traditional horizontal support and resistance works. Now how a trend line works, so let's draw a trend line now. So a trend line may look like this. And the way price will work on a trend line will go up, it will come down and bounce off the trend line, go up, come down and bounce on the trend line, go up, come down and bounce on the trend line. And then finally, the trend line will break. And when the trend line breaks, price will come back up to the trend line, retest it, and then continue on in the other direction. So if you think about what just happened, they're essentially the exact same thing. Horizontal support and resistance and trend lines function in the exact same way. It's just that trend lines are diagonal. They are angled. They are not perfectly horizontal. As you can see, they act as support when price is above them, and then they act as resistance once they are broken. Same way that our horizontal level acts with price, act as resistance and then become support. And of course, this works in both ways. So now when price is going down, you have a descending trend line. When price reaches this retest, it will hold a support and price will continue on, just as it did here with the horizontal level. So the way that I want you all to understand what trend lines actually are, the answer, if anyone asks you what a trend line is simply diagonal support and resistance. That's it. That's all a trend line is. So this is our answer to the question, what is a trend line? So now that we know the core basics as to what a trend line is and kind of how it works, we need to understand conceptually why they form so that we have confidence when we use them and put real money on the line. All right, so now our question is, why do trend lines form? Why should we rely on them for our analysis? So what we're going to do is we're going to just draw an uptrend here for this example. So here's our uptrend. All right, and then we're going to draw our trend line for this uptrend. All right, so let's connect these here. Okay, so to understand why trend lines form, we need to understand a little bit about market psychology, supply and demand, and market participants. Right now, we can conclude that the market is bullish. So when we conclude that the market is bullish, what that means is that key market participants, people with enough equity to move the market and actually impact price, are long on this pair. Now, if you open up the market and you're looking to get in on this market and capitalize on the bullish move, here's my question to you. Do you buy right here when price is high? Price is high, overpriced, expensive, etc. So up here, this is not the place to buy. You don't want to buy when price is overinflated, overextended, and expensive. Nobody goes to Walmart and buys the TV once it's been marked up. Everyone goes to Walmart and buys the TV once it's on sale. Now, there are a lot of deep economic concepts and principles that drive this human behavior, and you see widespread applications of this across all economic sectors. You even see it in holidays, and you see it played out with events like Black Friday. Now, I don't know if you've ever been to a Black Friday event or a Black Friday sale, but people are willing to kill other people. They're willing to slap babies for 20% off a microwave. Absolutely irrational behavior, all just for a quote unquote fair or discounted price. Nobody wants to pay full price. Now, this is not necessarily some kind of wise, deep understanding. Most people can rationalize that the general public would want to buy something at a discount rather than paying full price. But when we start talking about institutional investors, the people that actually have the equity to control market price and move and impact the market, these people will only buy at a discount. It's not a want for them. It's a requirement, because these people have so much money on the line, that buying at a discount means saving billions of dollars on just a single transaction. So when we talk about the financial markets and we're looking at cases of supply and demand, it's important to understand that these big players, these people that are actually controlling and moving the market, they have no choice but to get a low price. There's simply too much money on the line. 20% of $100 is only $20. 20% of $100 billion is $20 billion that it would cost them to not wait for the discounted price. So when we look at trend lines, what we're really seeing is institutional investors coming in at a common discount rate. So if you open up a chart and you see that price is up here, the institutional investors are looking at this and thinking, okay, I need price to come back down for a discount so that I can buy. And this ascending trend line support here typically forms because the discount rate that many of these institutional investors are looking for is usually around the same rate. And when you have similar pullback ratios, you form a nice solid trend line that you can rely on to manage trades with, as well as help you identify the overall market trend. Because we understand that big players are the ones that actually control the market trend, here's another way I want you to understand what a trend line really represents. So let's say that over here, we start off and price is at 81.0. And then let's say that some big institution has a total of $50 billion that they need to get rid of. So let's go ahead and write down $50 billion that they need to get rid of. So let's make this a little smaller here. All right, so they need to get rid of $50 billion. So what they're gonna do is, let's say they get rid of 10 billion of it right here. So roughly 10 billion they get rid of right here. Now when this happens, so when they place this order right here, it's going to push price up. And now when price is all the way up here, they're not going to place another order. What they need to see is they need to see price pull back so that they can place another order for, let's say, another $10 billion. So they want to get rid of another $10 billion, but they need a discount to do so. So what they'll do, and they know that they've got to do this. So let's clone, and then so 1, 2, 3, and then let's move this up here as well. And then here's our final order. So they know that they need to do this a total of 4 more times to fill the entire $50 billion worth of order. So what they'll do is they say, okay, I'm going to come in at a 60% discount rate. And they're only going to fill their orders at the 60% discount rate. So I want you to imagine that over here on the right-hand side, when we looked at this bullish market, what you're actually seeing is 60% discount rate buy order. Okay? Right here. 60% discount rate buy order. Right here. 60% discount rate buy order. And this is what's driving the market in its bullish trend. It's supply and demand. They're coming in, filling their orders at specific discount rates that they've agreed upon, and thus you end up with a solid, reliable trend line that's showing you where they're coming in. And so what happens from a conceptual standpoint is when this trend line breaches, we now know that those orders are done being filled. They've now filled their order. So what will happen is price will come back up. It'll test it as resistance. The market has identified this trend line as a support. So it'll come back up and test it as resistance. And then sellers will enter in and then we'll go the opposite direction. So this is a conceptual understanding for why trend lines form. This is not something that you can see by just looking at a price chart. This is not something that you can just find readily online, but this is the truth and this is why they work. This is why we use them, and this is why you can trust and rely and have confidence in your technical analysis and understand what it means from a deeper standpoint. And overall, that's going to help you. Having this understanding will help you in your confidence in your trading and will help you make money. So now that we understand what trend lines are, why they form, we need to understand the proper way to draw them. All right, now for the bullish market, we are heading up, of course. So we will do it like this. And then in the bearish market, we are heading down. All right. Now, for trend lines in a bullish market, you need your trend lines to be at the bottom of price. You're going to be connecting the valleys in the market, the lows of the market, the points where market finds support and rises, bounces from the bottom. Those are the connections you want to look for in a rising market. Your trend line will be beneath the price, and we'll explain why in just a moment. Now, in a bearish market, your trend line goes above price. All right. So here in a bearish market, you're looking for the peaks in the market, the tops, the highs, the points where market comes up and rejects. Now, understanding how trend lines form from a conceptual standpoint will help you understand why the trend lines are drawn in this way. But one way that really helped me remember this is to understand why we're drawing the trend line in the first place. So let me ask you a hypothetical question. If we had a trend line, so let's say we're in a bullish market and we had a trend line on top of price. Now, if price were to break through this trend line to the top, retest and continue going, we would still be in a bullish market, right? So this trend line doesn't really tell us much in terms of what the trend is. And by definition, trend lines are used for trend identification. So that doesn't really make much sense to draw it on the top. However, in a bullish market with the trend line on the bottom, if price were to break this trend line to the bottom and retest, where's price going to go? It's going to go down based on our understanding of support and resistance. It'll break the support, which is beneath price, and then it will retest. And when it retests, the trend line will now be resistance, price will fall. So therefore, by definition, in a bullish market, having our trend line beneath price as a support will function to let us know when that trend line breaches, we actually have a change in trend. So it's actually aiding us with the trend identification. So that's one technique that I use and recommend understanding to remember whether you need to draw your trend line below or above. So just remember that. Think about that when you go into the markets and you're trying to figure out what you need to be connecting. Ask yourself if drawing the trend line there will actually help you in trend identification. Similarly, over here in this bearish market, we know that when this resistance breaks above our head, we know that that means that the trend has changed. We are now going to be going bullish based on our understanding of support and resistance. However, if that trend line was beneath us, when price breaks the trend line to the downside, it would retest and simply continue going down. So it doesn't really tell us anything about a trend change. So it doesn't really do us any good in terms of trend identification and alerting us of trend change. So that's conceptually understanding how to properly draw your trend lines. And now we've got enough information to go into the markets and apply it. All right, so here we are on the US dollar Russian ruble on the daily time frame, and we're going to go ahead and drop a vertical line over here and just work our way from the left to the right, identifying the trend lines in the market, seeing what they actually look like in the market, and getting into some of the details about how to specifically connect different peaks and valleys to get the most accurate trend line possible for your trading, which will become very important in later lessons and in your overall independent trading. So let's zoom in over here on the left-hand side. And we're going to just start with this area right here. So the first thing that we're going to note is that we've got a peak in the market right here. Okay, so let's go ahead and call this out. This is a peak in the market. All right, now we fall down here and we come back up, and then here we fall again and we see, okay, we've got another peak in the market right here. So here's our next peak. And similar to support and resistance, how you need at least two identifiers to actually mark your horizontal level. When it comes to trend lines, you also need at least two identifiers to mark your trend line. So if you notice over here, we are in a bearish market. How do you know we're in a bearish market? Well, real simple. If you look on the left, we start up here. If you look over on the right, we end up down here. You go from here to here, that's down. That's a bearish market. No need to overcomplicate it, okay? We're in a bearish market. In a bearish market, we're interested in trend lines on top of price. So here we are, and we're going to connect these two peaks to get our trend line. Okay, now let's talk about this connection because this is really important. So everyone's got different ways for drawing their trend lines, and 95% of people who are teaching it are wrong. So if you want to really make money, listen up. This is important. This is very important. When you draw your trend lines, you need to know the outermost boundary of your diagonal support and resistance. The outermost boundary. So first of all, over here on the left, right here, this needs to connect to the uppermost peak, right here, the wick, top of the wick. Okay, and then right here, I need this to connect to the top of this wick right here. So I have the outermost peak. All right, so I'm going to adjust it to that. This is incredibly important, and there will be minor exceptions to this rule, and we'll look at more examples in other videos of when that happens. But in general, this is how you properly draw your trend line. When you draw your trend lines in this manner, you know for sure that when price breaks this, it's broken the outermost boundary, the outermost support or resistance level and you can for sure rely on the fact that you are looking at a potential trend change. So now, notice how when we connect these peaks, what happens when price gets back up? We fall again. And then price comes back up right here, we fall again. And then remember how when we discussed support and resistance horizontally, we discussed how we'd like to see that it takes strong momentum to break through the level. It lets us know that that level is indeed strong and something that we can rely on from a fundamental standpoint. Here we have a strong candle breach right here, and then look what happens. Real simple, price strong breach, retest, held as support now, and then off we go. All right, real simple. So very similar to horizontal support and resistance. It's just that we're now turned diagonal. So here is our reaction point right here. We can get rid of this arrow. All right. So let's be comprehensive here and mark these. The slower these videos are, the better, because it just ensures that there's no questions left. Breach, breach, and retest. All right. Now another word for peak, we keep using the word peak so that everyone understands that these are the highs of the market that are creating this trend line here in this downtrend. But another word for all of these is what? Resistance. This is the market's diagonal resistance. Come back to the example as we've previously discussed in another video to help explain one of the key concepts about trend lines. So if you recall, we discussed, and I've already got these areas circled here because we've discussed them before, but we discussed how important it is to use the outermost boundary when you are connecting peaks or connecting valleys to draw your trend line. So in this example, the outermost peak was this wick right here and this wick right here, which we can bring it actually a little further out like that, okay? And then I'm going to drag this through here, right in this area. Now, in the previous video, when we had talked about this example, we didn't talk about what to do in this case once we had a wick come through the trend line. So based on what I've told you all, you needed to adjust your trend line to fit that new wick like so. And let's just move this arrow slightly out of the way and make sure. Okay, yeah. So we've got the outer boundaries here, which is good. So let's zoom back out. All right, so we're going to get further into this topic in a later video. We're going to talk about fanning and how these multiple possible trend lines actually work together to give you a clear understanding of the trend and what you need to be looking to do. But as just a general idea, I wanted to explain this specific example so that you understand how to adjust trend lines to market conditions and keep everything accurate. So in this case, for simplicity's sake, I'm going to delete the original trend line. So once you see that this has happened over here and that price has busted through the original trend line, you then, so keep in mind our trend line was here. Once you see this and price falls back down, you adjust the trend line to here, and that is now your trend line. So then over here, when we had price, and price busted through with a strong candlestick, came back to retest, that resistance has turned to support, and then price continues on. Likewise, look over here. If we extend it even more, look at that. So price comes back over here, that resistance is still acting as support, and then we rise again. Okay, so that's how you handle this situation. If you have a trend line and then price goes to that trend line and then goes through it, creating new wicks, or even if there's a false breakout, you need to always be adjusting your trend lines accordingly. So I just wanted to cover that in this video to make sure everyone has a clear understanding of what they're supposed to be doing in those instances. Welcome everyone, welcome. In this video, we're going to be doing, you guessed it, trendline training, and specifically what I want to do is I just want to look at a ton of examples for you all. We're going to be going through different market conditions and just going with the flow of the market, seeing what we can find, marking up our trend lines, practicing together, and just really just kind of talking through it as we go together so that you know what I'm thinking when I see certain market conditions. And hopefully we'll go through so much data in this video that you feel confident and are able to go into the markets on your own and mark up, analyze, and trade your own trend lines. So I've got platinum pulled up here, platinum against the US dollar on the daily time frame. We're going to be just going through it. Let's just start over here right in this area. So we're going to draw a vertical line right here and just start from right there. Okay, so the first thing I'm noticing for trend lines, so we've got this right here and this right here, and we're going to connect those with our trend line. All right, so we're just going to throw our trend line just like this, and then let's go ahead and tidy this up. So remember, what are the rules for drawing this? We want to connect the very bottom right here, the very bottom boundary with the boundary here, and this is the outermost boundary. So notice how I don't have it like this or anything like that. It's out here, okay? Outermost boundary. All right, and then we can see right here, price did find support here, bounced up to make a new high after that. When we breached, so when price breached down, we came back up, found resistance. So the resistance candle was right here. That was the sell opportunity. And then now we're going to have a new trend line. So let's get rid of these markings right here. And then let's go take a look at the next example. So the next example, we're going to start up here. We have a peak in the market, and then we've got a peak in the market right here as well. So we're going to connect these, start right here, pull through like so, and just bring this down. All right, so let's zoom in here. Let's make sure that we've got it connected accurately, and we do. So again, we are looking at this wick right here and this outermost boundary right here. Notice how when price bounced down from here, what did it do? It came back up right here, found resistance, and then shot down. Now, when that happened, notice how price kind of wigged through right here. So we need to adjust our trend line. We're going to pull it out just a little bit. So we're looking right here at this wick. Now we've pulled it out a little bit. And then what's price going to do now? It comes down, comes back up to our resistance, and then what? Drops again. But when it does that, look right here. Again, this wick stuck out right here through our trend line. So we're going to adjust it again. So we pull it out. And then that's our final trend line. All right, so the next thing I'm noticing is we have another peak in the market right here. So when I see that there's this peak in the market and we come down, I'm thinking, okay, what other significant peak have we had recently? Well, this one. So what I'm going to do now is I'm going to pull us out here, and I'm going to connect these two together like so. All right, and let's just zoom in and make sure that we're doing this right. We need the outermost boundaries, and it looks like we've got them. So notice how price, okay, we shoot down, of course. Now we've got this trend line marked. Price comes back up to our trend line and then wicks through. So then what do we do when this wicks through? We adjust it, right? Like so. So just to be nice and thorough, this wick right here was why we adjusted it. So when this closed, we adjusted the trend line. And then look, price flowed within our resistance real nicely, dropped back down, came back up, and then dropped down again. So let's pull out here and then get rid of this yellow here. So I hope you're starting to get a feel for this and seeing how price is reacting at these levels. Let's go ahead and extend this trend line through and see what happens. So price comes up here, wicks through, we adjust it, wicks through, we adjust it, and then breaches. And that's that. Trend line's over. So what happens after that? What happens after that? What does price do? Well, we breach with a decent candlestick. What are we expecting now that our descending trend line, which was once acting as, so this was acting as resistance, what do we expect is going to act as now? Support, right? And what does it do? It acts as support. See, right in this area, price came back down, found support, bounced, found support, bounced, found support, bounced, and then ultimately we will see a change in direction right here. So let's get rid of this, zoom back out. All right, so one thing that's important to note, all right here in this area, the market was bullish, so the trend line was drawn underneath. It's an ascending trend line drawn underneath price, showing the support that's holding price up. And then when that broke and we entered our downtrend, we noted the trend line that was above price, the resistance that was holding price down. And then same thing, when that ultimately broke, we continued down, so our trend line was above price again. So let's keep going. Let's keep going. All right, so I'm noticing that we have a peak in the market right here. So let's zoom out. Let's get rid of these because they're throwing me off a little bit. Let's get rid of this. Now, what is our most recent significant peak? I'm looking at this one right here. All right, so we're going to pull that one through. And again, it doesn't really matter, guys. Like, you can connect any peaks that you want. I can choose to connect these two peaks if I really want to. Watch, I'm going to pull it through. Watch what happens, okay? So I'm connecting these two peaks in the market for this trend line, and look what happens. Look how well respected this is. Price breaks through, retests twice, and then keeps going. All right? So it doesn't matter what peaks you choose to connect. They're all going to work. They're all accurate. So let me get rid of this. Let me get rid of this. I personally want to use this overarching peak in the market right here, and it'll become clearer to you as you practice more why I'm doing that. All right, so that's the trend line I'm using. You can see what happens after that. Price comes back up to this, finds resistance, drops, comes back up, finds resistance, drops, breaks through with a large candle, and we don't seem to get a retest right here, but we do continue on bullish. So let's see, are there any other examples we can use in here? There are. So smaller examples, got peak right here, peak right here. Let's connect them. Let's connect these just like that. Boom. Look what happened. We had resistance right here. Price came up, fell, came up, fell. Just like that. You adjusted it, pulled it across. Look at that. Oh, you're so mad. Isn't that beautiful? The price came up, fell, we adjusted it, broke through, came back to retest it. What was once holding as resistance now becomes support, and we fly off. Isn't that amazing? Amazing how this works. And notice how, too, this is a great example of this. What was a diagonal level to begin with then became basically horizontal. So notice if I get rid of this trend line and I replace it with a horizontal support and resistance level, look at that. It's the same exact thing. These things are the exact same as horizontal traditional support and resistance. They're just diagonal. All right, so next example. Hope you guys are having fun with this. So here's the valley in the market. Here's a valley in the market. Let's connect them and watch the magic happen. So we're going to connect right here to right here. Notice again, using the outer boundaries here. All right, so zoom in. So what ends up happening in this case, price shoots off, comes back and finds support, but look at this. it wicks through our trend line. So we're going to adjust our trend line. I'm going to pull that down and we're going to pull it through. And then look what happens over here. Okay, price wicks through our trend line. So we're going to adjust it and pull it through. And then look what happens next. Price wicks through our trend line. So we're going to adjust it and pull it through. And then look what happens right here. Price wicks through our trend line. So we're going to adjust it and pull it through. And then look what happens. Price breaches with a strong candlestick, retests, and then we drop. So this held as support, strong candle breach, retest, and boom, that was that. Beautiful. Now, a lot of people, guys, they don't understand the market well enough to trade these successfully, but if you understand the concepts that we're teaching you here, you'll be able to apply these things and be a part of the few market participants in the retail space that actually make money. Look, I want to show you all this too. So we were using this trend line right here, but there were other opportunities here. So there's other valleys in the market that you can use to connect. So what happens if you use these instead? Let's find out. What happens if we connect these two right here? Look at that. Did it work? Here, let me move this out of the way so you can see. Did it work? Yes, it did work. Price came up, found support, came back, found support, came back up, and then look, we had to adjust for this wick right here. So let's zoom in. So we have to adjust for this wick right here. So we're going to do that. We're going to pull it through, and look at that. Wow, look at this break and retest right here. So price breaks with a strong candle, retest, drops. All right. And what is this? What is this referred to as right here? This is support becoming resistance, break, and retest. All right. That's what this is. You need to understand these concepts. These concepts are important. They're used over and over and over again. All right, zoom back out. Let's look at another example. So price is going down right here. You can connect this right here with like this right here, but it's not like a solid like swing. You can do it. It's not my favorite, but it does work. You connect it when price breaks it, you're buying type thing. Not my favorite though. If it was me, I'd look for this peak and then I'd look for like this peak right here. So seeing that this drops right here, I would connect these two outer boundaries like so. And then, so if we zoom in right here, what happens is these wicks come in. So we'll have to do a little bit of adjusting. So after that wick closes, we pull this out. And then after this wick closes right here, we pull it out. And this is great because I want you to see that this is not always going to work perfectly. It works a lot, but it doesn't work always, as with everything that we teach. So in this case, when price broke through, it did find a little bit of support now, but ultimately it breaks back in, retests on the inside, finding resistance, and then drops, okay? So it's still respecting the level, but it doesn't necessarily mean that you saw a strong volatile push in the direction that you may have actually been trying to trade. All right, so it's good that we see these examples here, but let's go ahead and let's get rid of this. And let's look at some of the other possibilities that you could have been looking at in this area for trend lines. So, all right, so let's pull over here. We've got this right here. Let's connect these, pull through. Let's see what happens. So I'm going to pull this all the way through here. Look at this. This is actually quite incredible. So let's get the brush tool. Okay, so when we come up, we break. We come down, we hold a support. We come down, we hold a support. We come down, we hold a support. Support, 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 support. Rise off. Okay, beautiful. So price was just grinding, holding against this support right here once we reached incredible. All right, so let's zoom out here. Look at this. Look at this, when you zoom out, you can see these lows over here, all right, that we already talked about earlier. See this low right here? Let's connect them. Let's connect them. Outer boundary, look what happened. There's your buy opportunity right here. When price came back down, bounced off the trend line, that was ultimately what caused price to soar off. Amazing, isn't it? All of these work. They all work. Pick any peak, pick any valley, they will all work. Let's get rid of all this. I say they will all work. Obviously, there's going to be some losing trades, but the consistency of these principles and your ability to make money on them, I mean, it's incredible. Here we go. We've got a valley right here. We've got a valley right here. Let's connect them. Let's connect them. What happens? Price comes up, comes back down to our trend line, finds support, bounces up, breaks with a strong candle, retests, finds resistance, continues on to the downside. Beautiful. All right.
What if I connected this one though?
Okay. Let's take a look. Connect these right here. What happens? With this, price comes up, comes down, finds support, comes back up, and then breaches, retests, finds resistance, comes back down, finds support at the next trend line, bounces, breaches that trend line, retests, continues on. Beautiful how price is moving between these diagonal support and resistances. Let's look at some other ones. Let's connect this peak with this peak. Let's see what happens there. Just connect this, pull it through. All right. So price is coming down, comes back up to our trend line, finds resistance, drops. Breaks through with a strong candle, retests, finds support, flies. That's simple. Moving over here. Let's see what we've got. We've got a valley, we've got a low right here. In fact, let's zoom back out. Look at this. Let's see here. Yeah, okay. It looks like there is this right here connecting these bottoms down here. So again, just noting this valley in the market, that low, noting this low in the market, and then connecting them with the trend line, seeing what happens. What happened? Boom! Oh my goodness. That was just stupid. I'm gonna have to name this video Stupid Pips. That was incredible. Look at that. So it really works this way. Let's zoom out here and take a look. What happens when we bring this out? All right. So again, remember, because we did have these wicks come through, we want to adjust it, pull it out to the end of those wicks, and then pull it through. And then look what happens. Look what happens. This is incredible. We're coming down, find a little bit of support, break through, find resistance, and drop hard. Come back up, still holds its resistance, drops hard. Come back up, resistance. Come back up, resistance. Drop, drop, drop. Incredible. Incredible how price is playing between these diagonal support and resistance levels. Let's come back over here to this area. All right. So I hope you guys are understanding kind of the flow here, how you're analyzing and marking these. It doesn't matter. Pick any two valleys or lows, pick any two highs. It doesn't matter. Let's just zoom here. Let's just zoom out. All right, look, it's this simple. Matter of fact, let's clear everything off, okay? So here's the top. Here's the top. Just connect them. Just connect them. Use the rules, okay? Connect them like this, like you're supposed to, and just use the rules. No big deal, all right? Now, in this case, you did not get an entry here because price didn't come back to retest, but let's pull out here and see what happens when price actually gets back to this trend line. All right, so look at this. Look at this. Price found support even though it was all the way over there. See how that works? All right, let's do this again. Let's pick another one. It literally does not matter. Here. Here's a low in the market. Here's a low in the market. Let's say that you're right around this area when you notice that. All right. connect these bad boys right here and wait and see. All right. Again, when we broke through here, we didn't really get a trade opportunity, at least not on this time frame. But that's how you do it. That's how you mark these. Now look at this. We've got a peak here. We've got a peak here. Let's connect them. Let's connect them. Boom. All right. So price came back up and found resistance there. All right. Let's zoom back out here. All right. So let's see. We've got more peaks in here. Matter of fact, why don't we connect our two newest peaks right here? Go ahead and connect these. So we'll use that wick and that wick. Let me get rid of this previous one right here. Get rid of this. We'll get rid of this. Okay, now look. All right, teaching moment. So with these two peaks right here, you could pull this down off in here and connect, you know, this, and then pull it into the bodies and connect it like that. And that's how people teach it. You know, they have all different kinds of ways of teaching it. Do as we suggest, you will make money. Use the outer boundaries, okay? Use the outer boundaries. Let's pull through. Look at that, okay? Look how this works. Price came up, and then look at this. So we're going to zoom way in here. All right. These wicks right here, you adjust, pull up like that, and then price holds right here. Price holds and then sells off, and you're in that sell because you had this trend line marked. Let's see, this was June of 2018. You had this trend line marked over here in February of 2018. So you were waiting a few months and you got the sell right there. Now you adjust the trend line out to this wick right here, and that breaks through. So you now have your outermost boundary, and let's pull it through and see what happens. All right, so in this case, again, I love to show these examples of areas where it's not 100% clean because it happens sometimes. So price broke through, came back in, didn't hold perfectly as support. We did end up holding at support and going on, but there's a little bit of a whipsaw right here. It's going to happen sometimes. It's going to happen. But if you haven't noticed already, if you look at like the ratio of how these things play out, more often than not, you're looking at winning trades. All right. So let's get rid of this now. Let's look at some other examples in here. Again, it really doesn't matter. The only thing that matters, it's important to note, is that in this area in here, in this entire area, you know, like we're in a downtrend, the market's falling. So, you know, we're really only interested in, let's see here, really only interested in our peaks. All right. So we're looking to connect peaks. So it looks like we've got this one, these, this one, okay, this one, all right, this one, we got this one, this one. I'm just looking at peaks. Where are our peaks at? What are the possibilities that we can use to draw and trade trend lines, all right? Peaks in the market. All right, and then over in this area, we're bullish. So we're looking at what? Looking at our lows, our valleys, okay? Now, don't be like overly hard on yourself and overcomplicate it. Even though we're bullish here, you can connect these trend lines on top. It's not going to hurt you. It's just not going to give you the information you really, really want. All right, when we talk about channels, you'll see that it's totally fine. But again, trying to instill good trading habits here. All right, so let's just connect some. So you can connect this right here. It's not really going to do you very much, but you can. Okay, let's see what else we've got. We can connect these two right here. Okay, and again, that's a fair connection. You know, you lose this trade, but it was still a fair connection. So there's a loss, an example of a loss. What else we got right here? So you can connect these two coming down. That was actually a pretty solid trade, not on this time frame, but you would have been entering on the lower time frame. When price came back up, it rejected very nicely, and then you got a nice buy opportunity right here when it broke. So let's see what else we've got. Okay, we can connect this. Don't really get anything there though. We can connect this. Again, don't really get anything there. We can connect this, right? Again, this actually, if we look at this, let's see what happens here. So get rid of these arrows. Looks like price wicked through right here. So we adjust, and then it wicked through again. So we adjust, and then it looks like it wicked through again, adjust. You actually don't end up losing in this area. This is actually a solid hold right here. So it's actually a pretty good trade opportunities there. Again, a lot of it's just understanding how to properly adjust your trend lines to market conditions, which is why we spend so much time focusing on your ability to adjust and your ability to draw these things accurately at any given time. So like right now, this needs to come right on out here. All right, let's pull it through. Let's see what happens. Okay, so price was bouncing as resistance. We needed to adjust, and then boom. So we adjusted because this area had poked through, and then price bounced down again from the resistance, broke through, strong candle, retested, found support, continued on. All right, that was that. What other peaks could we have connected? So we could have connected these right here. If you connected these, you got a solid sell opportunity right here against the trend line. And then price broke the trend line here and then held its support, bounced, held its support, bounced. I'll extend this trend line down so you see actually how that worked. Look at this. Get rid of this. This is incredible. Pinpoint support on the other end, bounced up. Very nice trading opportunity. Okay, what else? You could have connected these. All right. Again, same concept. Price held its support on the other side when it broke. Nice trading opportunities there. Get rid of some of these yellow circles on the screen. They're kind of throwing me off a little bit. All right, what else could we have connected? We could have connected this like that. Again, pretty simple stuff. Resistance, resistance right here, broke through. Resistance became support. We continued on. All right, what else could we have connected? We could have connected these right here. Oh, look at that. Just sell, sell, sell. Let's pull it through. Let's see what happens. All right, again, look right here. It's one of our valleys. That's why these valleys probably exist, retesting this level, and then flew up. Beautiful. Easy stuff. It doesn't matter, guys. It really doesn't matter which ones you connect. They should all work. Very solid trading opportunities. Let's see what we've got over here. We're actually coming up on the live market. So right here, we've got peak in the market, peak in the market. Connect them with our trend line. See what happens. All right. So first thing we need to note, price held at resistance right here, but it did wick through a little bit, so let's adjust it. Like so. Let me move this, make sure. Okay, looks good. All right, now down here, price held, peaked through a little bit. Let's adjust it. All right, make sure we adjust it to those wicks there, and adjust it to the wick there, and then boom, there we go. Solid break, came back down, held here. Why did that level hold right here? Because we've got a trend line down here, holding it. Okay, pretty nice. How do we get that trend line? We have a low right here, a low right here. All right, we're just connecting them. And then price gets back down here and then flies up. Now, there's a little bit of a whipsaw right here. All right, you can see, if you look closely, see that price bounces a little bit, breaks through with a stronger candlestick, retests, does come down holding at resistance, but ultimately breaks back in, retests, and continues up. Again, we'll talk about that stuff in later videos, how to handle those situations and remain profitable in those cases and all that. But here, let's do a live market one real quick. Move everything live market, okay? So the low right here, the low right here. There's your trend line. That's simple. All right. What are we looking to do with this trend line? We either want to price to come back so that we can buy, or if price breaks this, we want to see it come back up to test it as resistance and then sell off. All right. It's that simple. So I hope that we went through enough examples in this video for you to understand the concepts of how to identify the trend lines, how to properly mark the different points that you need to connect, how to connect them properly. Hopefully it took some of the stress off your shoulders. Hope I didn't go too fast, but if I did, just go back through the video several times and use it as a reference anytime you feel like you're struggling. All right, and trend lines are so important. You know, diagonal support and resistance is so important. So if y'all are for some reason struggling with these concepts and how to actually draw these or how to trade them or identify them or get the right ones, let me know or let Easton know. We'll put out more videos with more examples. We'll go in deeper if we need to. It's time for you now to go out and practice on your own.